Hey guys, Rajiv here from Financial Video. So right now I'm seeing a live trade in Jubilant. So this is the key layer actually where my sell entry would be for this stock to trade. So just let me go through the overall chart for you. So overall, if you see, this is a good amount of selling pressure going on, and we don't see the buying strength coming in any way. Yeah, so I wanna use any rise to get into a trade into opportunity over here. So that's a sell off now, and that's a pullback. So it's an easy trade. Actually, not much complicated over here. Overall, the key layer is important because the context is much defined over here. So this is a trade based on purely 3-minute time frames, right? And where would be my stop loss? The stop loss would be above key level, above this key level, not exactly on the key level, on right above the key level. No, it will be some points above the key level. Hopefully I'll go above around. If the entry would be around 701. If the entry is in around 701, then it should be going around 70 around 704. Yep, around 704. 70350, 704 would be my stop loss over here. All right, so right now it is 725. Hopefully the short should be triggered by 750. I think it's been already triggered. Yeah. What is it? 725. No, it's not triggered yet. It's around 7. Yeah. So around 750. We'll go short over here. 750, 701, or right now, right away, we can go ahead with a short entry over here with a stop loss around coming around 70350 or 704. 704 will be too much for me. I think 70350 based on the break, it's okay. Yeah. So we'll go for 70350 as a stop loss over here. Now, what should be the target area for the members? There will be an overall video lesson on this trade, because we'll have to discuss the time frames from daily, hourly, 15 minutes, 5 minutes, and then I'll come to the 3-minute time frame. So here only in the YouTube video I'm just discussing about the entry chart, the 3-minute time frames. But for you guys, for the members, there will be a discussion on the daily, hourly, 15-minute, and the other things. So stay updated in the trade update section in the course curriculum menu. All right, so now the target should be what? Yeah, this makes some sense, but this makes some sense since we have a key layer right around here, so we can go ahead with a target of this place here. But again, since looking at the overall order flows, it doesn't look like we are going to stop really on this level if we are not getting an exhaustion in the price action. All right, so right now we are in this trade in sell entry, and we'll see how the price action reacts, and if the overall order flow momentum remains the same, then we'll not exit on this layer of support, and we'll keep trailing our stop losses. Hey guys, Rajiv here again. So this is around 2:15 right now, and our trade is already opened. So as you can see, it tested the key layer of resistance we talked about here, and we had around 3 points of the stop loss. We talked about entry on 750 and stop loss around 70350. And so far we made a low of 689. So which is 688, around 688. So which is a gain of around 12 points so far. 12 points with a stop loss of 3 points. So that's a 1:4 gain and loss ratio, risk and reward ratio. So far I'm still in this trade. What you're planning is trailing the stop loss above this. Now, why trading the stop loss below this? Because I want to be in this trade on an intraday basis till the time this momentum is living on. This smooth sell-off momentum is living on. So, in any point of the session, I see the price is breaking out of this momentum, breaking out of this overall context that I want to get out of this trade. So the stop loss will be above this somewhere. It will come around 690. 696, yeah, around 690, 650, 697. The way we place the stop loss over here based on the key level. All right, so the idea was some points above the key level. There are some other criteria, other things we consider while we place the stop loss as well. So it's just not why I mean that, because it's don't just take it that we just put the key level and placing the stop loss right above the key level. It doesn't work exactly like that way. This is the context that our stop loss is always being placed based on key levels most of the time. All right, now where to place it, for that there are some other specifications over there. So this is the next key layer for me to be considered in this, to which I feel like this should be playing a key role for this overall context to be stay alive. All right, so till the time this is not breaking, this is being respected, we'll be in this trade. And let's see, on an intraday basis till 3:30 we'll be seeing how it works out. And in case if we see the price coming back down here and breaking the previous lower low, and the price is giving us a false break kind of thing or a bounce back from here, then it may happen that we can consider an exit on an intraday basis directly, looking at the price action scenarios happening or while breaking it the previous lower low. All right, so let's see. Hopefully I'll be updating you guys for the further setups here. Now, for me, the trade will be, if I'm hitting the trailing stop loss, then the exit is in 750, and the entry is in 750, and the exit will be triggered as 696. This is 696.50, 696.50. So that will be an exit with a 1:1 hour plus some more amount. That will be, 750 is your entry, 696.50 is your exit. So 4 points of gain and 3 against the 3 points of stop loss you have been following there. So it's a bit more than 1:1. That's it. So which will actually help us to cut the brokerages and taxes and all those things. All right, so let's see how the trade proceeds. And on a positional point of view, actually this trade should have a higher stop loss if I'm doing it as a positional based basis, with the long-term target coming around as we discussed in the last session here, which is 676 layer. So in that case, the stop loss will have to be 12 in a different way. You'll have to place the stop loss in a defensive way. But now you're placing the stop loss a bit, aggressive way. So any kind of change in order flow momentum right now, whatever is happening, if we see any kind of change in that momentum, we want to be out of the trade in terms of intraday basis. But again, if you want to do a swing trade, then the stop loss will have to be a bit larger, because you'll have to give some good space, some good trading room for the price to breathe for a medium term corrective swing if it happens over there. So those things are there. So anyhow, I'll see you guys on the next update. Thank you. Hey guys, Rajiv here. So right now I'm closing the trade at a rate of 685 since the market is closing down. So it's 3:20 now, 10 minutes left for the market. So we opened up this position on 700.50 and we are closed on 685. That's a gain of 15-16 points against risk of 3 points, which is a gain of 5 times of what we risk, 5R. So that was a purely intraday trade, but still valid for a positional swing trade. As we talked last time, you're trailing the stop loss above this key layer, and we also talked about this. If we see the price is not sustaining well below after a break of previous lower low, then, and we also see a reversal in case, then we'll have to take a call on here. But as you can see here, it has broken the previous lower low very much smoothly, so we don't need to worry, and we can now trail the stop loss from our last place to above this area here if you're holding it for a swing trade for the ultimate target of 675. Now if we see Nifty today, Nifty is closing on its day's high, so irrespective of the index momentum, very strong momentum in Nifty towards upside. The stock didn't respond to Nifty, so that's also a lesson for the people. I know a lot of people, actually, there's a very general query that when you are trading in a stock for intraday especially, then should you keep an eye on the index? You don't need to, actually, and this is a live example. You can see the Nifty trading at day's high with very much bullish momentum in it. It's not really responding, and the stock is not really responding to that momentum at all. So this is my experience. So when I trade something, then whatever the context or the price action analogy I see in that particular stock, we use that analogy and we trade accordingly. Otherwise, if you keep trading stocks, and in the meantime you start seeing, oh, what is happening in Nifty, oh, what is happening in Nifty, oh, what is happening in Nifty, then you will be confused, and it will disturb your trading style. It will disturb whatever context you are trading in, whatever stocks, actually. So either if you have that kind of mindset, and if you can't ignore that, then stop trading in stocks totally. You just trade Nifty. But if you can be that kind of flexible trader, then you can go ahead and trade anything, because I've seen so many people leaving good trades just because Nifty is not going in their direction, so that's funny. Anyway, all right, so that's it from today, from my trading desk. I'll see you guys with a new trade update, hopefully. All right, thank you.